Hello. So welcome, guys. So there's my first segment of doing top-down analysis. So today is on a Wednesday, 11th of February 2026, and I want to do top-down analysis. Since today we're going to be having NFP, so today it's a NFP week today, and today I'm not in the markets maybe until 9:30 New York time. After that will be after NFP. So I want to do top-down analysis on Nasdaq. So I'm going to be starting with the monthly time frame. So there's simply in the monthly time frame, and you want to see what has the market been doing. Okay. So from April, 1st of April 2025, uh, after taking out this sell side liquidity right here, so there was sell side liquidity. Sell side, sell side liquidity, and bottom. Okay, so there's our monthly time frame. So we took out sell side liquidity, as you can see there, and immediately we did that. So we had a run on stops, and then closed higher. Okay, then what happened is that we were having this CB, sell side imbalance, buy side inefficiency. There's one candle. So there's three candles. So one, two, three. So two candles whereby we are having one straight path. But then this one, the wicks do not touch. I mean, they do not touch. So these candles low to these candles high. So that is what we called a fair value gap, and it's which. So we normally have classification of fair value gap. So it's which classification of a fair value gap. So there's a CB, sell side imbalance, buy side inefficiency. So what happens that immediately we ran on these sell stops, I mean sell side liquidity. So what's resting below these sell stops, okay? So immediately we run on that. Then we were having this fair value gap here. Which classification of a fair value gap? So these are CB, sell side imbalance, buy side inefficiency. So inside this level, yeah, you want to see if at all price to continue lower, then this CB here needs to hold price and push it lower. Yeah. But then what happens if that doesn't happen? Then that means that we ran on stops and we are now targeting buy side liquidity. So before we ran up here, the buy side liquidity we're having was this one here. Yeah. So that's what you are having. So around this price level, we see we were having this CB. So how do you know that a fair value gap is not going to hold, or is not going to support price going lower once we trade and close above it? So the way we did here, close, trade above it, trade and closed above it. So that simply tells you that this IFVG, this fair value gap now becomes an IFVG once you trade and close above it. So this one becomes an IFVG. Mm, so that's what's up. Okay. Then again, after leaving this level, so before taking out this buy side, there is any liquidity, any buy stops resting above here. What do we see here? So we have these candles high, then one straight pass, and then this candle slow. whereby we take out this liquidity. So this low, this candles high to this candles low. So these two levels, there's also a fair value gap. But now which classification of a fair value gap? Yeah. So let me, so the which classification of a fair value gap? So these are BC, buy side imbalance, sell side inefficiency. Yeah. BC, buy side imbalance, sell side inefficiency. So that's what we are having. And because I don't want to put too many boxes in my chart, so I'm just going to highlight these with these lines. Okay. So you're welcome. Uh, so this one here. So let me just use this. So these are fair value gap in form of a BC. So it's a classification, fair value gap, which classification? BC. Okay. So we leave this high here, and then again, what happens? It gives us another fair value gap here also. So these are the one you're going to use a rectangle to highlight it. Yeah. So immediately we run on stops. What happens? We were having this CB. If it was to support price going lower, then price should have been stopped around this level and continue. But then the fact that we violated this fair value gap and we closed above it, so that simply tells you that price really wants to trade high. Okay, so we ran on stops and then it's now bullish. So again, gives us a fair value gap here and then another one here. So it's really bullish, and most of the time, if we have two fair value gaps like this, these are the one I don't want to see price trade back into it. Yeah, if it's trading into this one, then it shouldn't be trading below the midpoint, the consequent encroachment of this fair value gap. So most of the time, I want to be treating this lower fair value gap as a what? A breakaway gap. Then this one as a measuring gap. So still, if at all you're going to trade lower, then anticipate for price to be trading into this upper fair value gap here. Yeah, so you see this upper fair value gap. So if at all we're having this range from that low to that high there, yeah, then this fair value gap slightly below the discount. So 0.5 level, that's the discount level. And these are premium level. So if it's really bullish, yeah, so if it's really bullish and in the next coming 5 years, okay, we are still going to be bullish, then I just want to see if at all we are going to be having a bearish months. Yeah, so maybe some bearish months, then I only expect to see price trade back into this level and leave this level here, leave alone this fair value gap, but trade into this upper one here. Yeah, so that's what I'd really love to see happen. uh it's not like right now I'm saying that I want to see price come trade lower, but we might expect something like that. Yet, for now, I'm still neutral because we've really been ranging. Yeah, we've really been doing this. So the past 1 to 2 months, we've not done anything, okay, of any significance. So it's really been bullish. It's really been bullish. Okay, it's really been bullish. So that's our monthly overview of price. Mm, scaling down to the weekly. Scaling down to the weekly. I want to so on the monthly there's levels. Let me make them visible on the weekly also. So let me make them on visible on the weekly and not daily and not. Hmm. Oh. So today is an NFP, and we are not doing anything really. We're just going to be waiting for 9:30 to open. That's when we'll start uh, framing for a setup. Okay. So now weekly, these were the levels that we highlighted on the monthly time frame. So let's see what happened here. So we're having this low and this one. So on the weekly time frame, I can see these were some relatively equal lows here. So that this low here, sell side liquidity, any sell stop resting below this low, and also any sell stop that was scaled, yeah, below this low here. So this one and this one relatively small. So let me just edit this and say relatively equal lows. Yeah, so that makes sense. So this low here and this one relatively smooth, relatively equal. So this level is really smooth. So what happened? Trade lower, took it out. Okay. So on the monthly time frame, I was talking about that fair value gap, that CB that was presented here. On the weekly time frame, I cannot see any CB here. Yeah, so nothing really was formed here, and till here. Okay, so we're having a small fair value gap here in form of a BC, buy side imbalance, sell side inefficiency. So we're only having that on the weekly time frame. And also we were having a volume imbalance. So a volume imbalance is simply two candles. Okay, so two candles whereby the bodies do not touch, but then the wicks overlap. So this one here is simply a volume imbalance. Yeah, so two bodies, a volume imbalance simply means two bodies whereby the wicks overlap. So the bodies do not touch, but then the wicks, they do something like this. Okay, so that's a VIB. So volume imbalance, short form abbreviation for it is VIB. Yeah, so that's our VIB there. So what happened? We tray into it, and you can see held price right there, and then pushed it lower into those relatively equal lows that were resting below any sell stop that was resting below here. But then we reacted from this volume imbalance, yeah, and drove it lower. So now again, if we are trading above into this level, you can see it really held price this week. So we closed inside this level, and then the following week it was really adamant. So it was really difficult for price to really trade above it. So this week, okay. So what happened? Again, this level held price, and we can see it was a sell week. It was a sell week. Yeah. Yeah. So that small candlestick, okay, right there. And then this other week we had an up gap. So an up gap, and so how are we going to call this? So is this a volume imbalance or is this a liquidity void? So we are having these two candles. So the wicks, they do that, but then I can see we are having a small space here, a small gap here, yeah, between these two candles. So these gaps, do we call it a liquidity void or still a volume imbalance? So I believe this now should be called a void. Yeah. But then it's really difficult to determine because we are having the wicks, so they're trying to inject each other, but then still we are getting a space here. So that's really something you can confirm on your own. Okay, that's something you can confirm on your own. But then what you need to understand, these are PDRA. Yeah, there's an array, so it just acts as a fair value gap also. So something like that, it also acts as like a fair value gap. And also we get a fair value gap here. So this candle, we're having that gap, one straight path, and then this candle also low. From this low to this gap, so to the body of that gap. So let me just highlight this. So this is our fair value gap, and it's still a BC. Fair value gap, still a BC. And then, so again, inside this volume imbalance, again, we were having a fair value gap. Again, we were having a fair value gap right here. Yeah. So right there, we were having a fair value gap, as you can see, and then also trade into that volume imbalance, and then push price into this relatively into these relatively equal lows. Yeah. Then now, as we are trading higher, we're having this range. So from that high to this low. Yeah. So around the 25 quadrant level, which PDRA do we see? Which premium array do we see? I can see this fair value gap here in form of a CB, sell side imbalance, buy side inefficiency. Yeah. So this one here. This fair value gap here. So as we are trading to the premium, this was our draw of liquidity. So if at all we are bullish, then this was our draw of liquidity. Then from there, we want to see price do something like this. Yeah. And then if at all we are to trade higher into this buy side liquidity. So what's resting above the buy stops, okay? So those traders that want to take this market higher, so they have their buy stops resting above here. So if at all we break this high, then they'll grab the opportunity of taking price high, okay? So what happens that for us, if at all we are going to push price into this level, then we want to see this fair value gap price trade and close above it. Yeah, we want to see price trade and close above it. So what happens here is simply price trades and close above it. So this area was really difficult for, I mean, it proved to be difficult for price to go above it. So we trade this week, and then the following week trade that. This other week we trade breaking above it, but then we are still closing below the consequent encroachment. See the body closes. So normally the bodies tell us the narrative, okay? Wicks simply do the damage. But then this other week now, it gives us the confirmation that we now want to trade higher. So how do you know that you now want to trade higher? Once we trade and close above it, above this CB, sell side imbalance by side inefficiency. So once we trade and close above it, then that simply tells you that this price needs to be taken above these highs here. So these are liquidity level. Yeah, so it doesn't want to trade lower anymore. Why? Because we've run on stops right here. These relatively equal lows. These levels are really smooth. So this low and this one really smooth. Okay. So what does the market do to smooth levels? It makes it jagged. Okay. So something like that. And now we're seeking higher prices. So around this CB here, we're trading higher. At first, it's really holding. So we can see the candles, okay, they're staying below the consequent encroachment of this fair value gap. So which classification of fair value gap is the CB? So sell side imbalance by side inefficiency. So it needs to hold price and push it lower. Because also from, I mean, this dealing range from this high to this low, these are premium area, and it's also occurring slightly above the 25 quadrant level. Okay. So if at all you're trading with that type of mentality, then once we, if the draw of liquidity was this level, so this other week you could be bearish, same to this other week. And if at all, because price was still doing what, staying below the consequent encroachment, but then once we trade and close above it, then these other weeks you want to be bullish and targeting this buy side liquidity. So this is your draw of liquidity, so you want to see to drive price above these levels. Okay. So what happens once you trade and close above it? So any pullback into this level, we want to see it hold, and we want to see it stay above the I mean, price. We don't want to see it trade and close below the consequent encroachment of this CB. Now an IAVG now. So this was a fair value gap now because we've traded above it. Yeah. So we've inversed it. So what happens now? It becomes an IAVG. So an IAVG, what needs to happen now? So we need to see it hold price and push it where? Higher. So if we push it higher, we are sipping any buy stops that were resting, any sell stop that were scaled to this level. For those traders that went short, their sell stops are here. And also for those traders that want to take it higher, they have their buy stops here. So they get triggered into the marketplace. Uh, so normally what I like to see is that if at all we're going to have a continuation, then I want to see a fair value gap created as we are taking out this high here. So what does that tell me? That we really want to, I mean, this market is really bullish and it really wants to deliver higher. So again, we see this fair value gap here. So this also a BC, buy side imbalance, sell side inefficiency. Just a BC is just a classification of a fair value gap. So it gives us that fair value gap slight right above this candle's high. So again, yeah, so again, on the monthly time frame, if you are here for the start, on my monthly time frame, I highlighted a fair value gap here. So let me just show you on the monthly time frame. What I was saying is simply this. So we were having two fair value gaps here. So this lower one and this upper one. So I was saying, if at all we were bullish, then we are extremely bullish. Then I don't want to see price trade back into this lower fair value gap. So if you can't see, then there's one here. So there's candles high and there's candles low. So one straight pass, these are busy. And also there's candles high, there's candles low, one straight pass, there's also busy. So we're having two candles. So normally I love to see price trade this one as a breakaway gap. So breakaway gap simply means that I don't want to see price trade back into this. I want to see it left and failed. But then I want to see if at all we are going to be having some bearish ones. I want to see it this price uh, taken down in here, and then we leave this one unfilled. Yeah, so that might happen or might not happen, but I'm anticipating something like that because we've really been bullish. Okay, and if at all we're going to get a pullback, then I just want to see it trade into this upper fair value gap. Yeah, so on the weekly now, we are having now that fair value gap here. Yeah, it's also in sync with that monthly. So we failed. I mean, it really failed to trade lower into this BC here. So that simply tells you that this market is really bullish. So it's chasing something up there. And we did see all of this. So what's this? So in an uptrend, so if at all the market is trading higher and higher and higher, so any down close candle inside that uptrend move, so any down close candle, those are what we call order blocks. Okay, so they're normally high probability order blocks and also low probability order blocks. So that I mean, uh, I think that's quite clear for everyone. So you guys know how to classify order blocks. So I'm not going to do that here. But as we are trading, I mean, as we were taking out these lows, so there's the last down close candle with a larger body. So taking out this low, so there's a high probability order block. Then we leave it. So as we are doing this, there's also another one, and there's another one, there's another one, there's also another one. And it's really amazing how this small one did that to our price. So we had that. So this order block is the one that held price, and it need not allow price to trade back into this other one. This lower fair value, this BC here. So you can see this order block hold price. So most sensitive parts of an order block is simply the open and the high. Okay, so the open, the high, and also the mean threshold. So the midpoint of any fair value gap is called mean threshold. I mean bullish. Yeah, so we are having that. So we're having this order block. So it's the one that was holding price. So we failed to close below. Okay, so let me just expand it now. So understanding order blocks, yeah. So just like fair value gaps. So this order block here, we're having its portions, its parts. Okay. So we're having the open, we're having the midpoint. Okay, so this midpoint is simply called mean threshold. Okay, then we're having the high. So the most sensitive part simply the open. So these are down close candle, it's a bearish candle. Okay, so classification of candlesticks, so we're having the open. If it's bearish, then open, low, high. Okay, so open, high, low, close. Okay, So the midpoint is simply called mean threshold. So what happens that for a fair value gap to be valid, then the bodies, we don't see the bodies close below the main threshold. So if we see a body close below the main threshold, then that simply tells you that you really need to be waiting for more information now. So if that happens, then you're now priming your mind, priming yourself that now it might likely trade back into this other. But then if the wicks, I mean, it's always say that the wicks do the damage, but then the bodies tell the narrative. So we see the bodies close where outside of this. So this simply what you could be waiting for. Yeah. So once you get that confirmation, then that simply tells you that this level is going to hold, and we are now continuing higher. So we see this order block hold, and we don't see any body close below the main threshold. So that's good. Uh, so that level holds, and you can see, look at the bodies. Isn't this beautiful, guys? Isn't this beautiful? So open. So the most sensitive, remember the most sensitive parts of an order block. So the open, the high, and the midpoint, which the mean threshold. So mean threshold is simply a fancy term, but can simply just call it midpoint. Yeah. So isn't this beautiful how the bodies are staying at the open? Just see, just look at this. This is really perfect. Okay. You can't improve on perfection. This is really perfect. And then what happens? Continue higher. So as we are continuing higher, again, what happens is that as we are taking out this high, price gives us a fair value gap here. So this fair value gap, again, just, I mean, which classification is that? A BC. BC is simply a classification of a fair value gap. So we are really bullish, and there's buy side imbalance, sell side inefficiency. So it was delivering buy side. So it buy side delivery, but then it was inefficient in offering sell side. Okay. So we anticipate for price to most of the time trade back into it. Also remember, as we are trading higher, we are trading higher. What's this? There's also another block. So I did say these are a low probability order block. Okay. So I did say if we close below the mean threshold, then what do you anticipate for price trade into this lower PDRA? Okay. Lower discount area. Okay. So we did that. Yeah. So just tap the high of that, and then continued higher. Again, we had this gap here. So there's a void. There's a void because we can see it's now a real gap. It's a real gap. So if you contrast it with the volume imbalance, so volume imbalance simply two candles that the bodies do not touch, but then the wicks overlap. So the wicks overlap, so the wicks do this something like this, but then a void, so a real void is where now we are having gaps. So a real gap now, a real gap. So that's simply a liquidity void. So around that level, we have that, and these levels also act like just a fair value gap. So I want to show you. We immediately trade below it. Which level are we trading back into? We're having this fair value gap. We're also having this order block. So we're having this order block, we're having this fair value gap, and we're having a liquidity void. Yeah. Then we trade lower. So as we are doing this, we want to see, can this level hold price and push it higher? If not, then which level again are we having in price? I mean, below price, we're having this BC here. Yeah, so remember, we're having this volume imbalance. We're also having this gap here. So we're having this gap, we're having this fair value gap, we're having this volume imbalance, and we're having this order block. So we're having different types of fair value gaps, I mean PDRAs. So now let's start. If we break below this this void, then our next draw will liquidate this fair value gap, and once we trade into we want to see, can it now hold price and push it higher? If it fails, then we're having this void, there's a volume imbalance. So let me just mark it. So that volume imbalance, also that. So we're having different types of PDRAs here. So immediately we break below this void, we trade into this fair value gap. So this fair value gap, this BC, does it hold price going higher? So let's say this coming week it doesn't, but then we draw into this level, and we can see it's holding price, and then we close low, we trade, I mean we have this down close. So immediately this happens, that simply tells you that we've really closed below the consequent encroachment of this fair value gap. Now the next level, we see also this volume imbalance. We don't have any candle close below it, okay? So it's like we trade also back into this order block. So did that, it was holding also all this. So in here we're having a tug of war. So most of let me tell you guys, so if at all we're having something like this, then it's always advisable that you stay out of the market. Yeah. So most of, if you're having a scenario whereby we are having two new week opening gaps, okay? So because most of the time these volume imbalances are simply caused by new week opening gaps or new day opening gaps. So if you're told we're having two new weeks opening gaps, and they are really close, okay? So let's say one is really slightly closer above this lower one. So on such days or such weeks, you really need to be careful. You really need to be conservative, okay? So don't just don't just confidently go into the marketplace trying to over leverage, okay? Because at times you'll find that the market now becomes choppy because there's a tug of war between those two levels. So higher, the new week opening gap that's above price, and the new week opening gap that's below price. So most of the time price will be doing something like this. So it's really striving to break above the upper one. So this lower one is holding, striving to break above the upper one, but then the upper one is also holding, striving also to break below the lower one. So what you need to do is just wait, okay? Wait and see which level has more money, and then once price expands to other level, then it now becomes safer. Yeah. So let's say if the buy side had more money and price ran to it, so now what you anticipate say is now that that new week opening up now act as a scaffold to support price now continuing higher. So again, that's what I'm saying here. So we trade into that, and then also this. So it was just a tug of war, and then finally we trade lower and see what happens. So we're having that order block. So we close below the mean threshold. So I did say on such days, it's really undecisive. And once it does something like that, start looking for any, I mean, it really now becomes difficult to determine, but then just still having in mind it's an order block and we've really tried into it. So we see this week trade above these levels and takes it back into this. Then trade now start becoming undecisive now. So we've really been ranging in here. Yeah. So we've really been ranging in here, and it's serious, man. It's really serious. So it's just been a tug of war inside this level. So on a weekly perspective, if you didn't realize, we've really been ranging. We've really been ranging, and it's serious. So again on the monthly time frame, what I failed to highlight is simply this. So I failed to highlight that we were having an insider candle. So there's one here. So this candle, because we failed take out buy side, we failed take out sell side. So I still normally did teach us something about an insider day. Okay, so insider day is a scenario whereby uh, that daily candle fails to take out previous day's high and also previous day's low. So we only having a small candle that fails to take out buy side and fails also to engage sell side. So what's the narrative behind an insider day? So it normally did teach us about expect the next candle or the next trading day to have a large range day, okay? A larger range. So we anticipating for a larger range. So if not the next candle, then the other candle. So again, that's what I mean. Then that's the narrative. That's the idea that I'm also working on in here. So I believe that January we were to have a larger range, but then failed to do that. February, I believe we might get a larger range month, okay? But then we're going to see. So a larger range month, we're going to see, but then I still want to see us break outside this range here. So we've really been doing this. It's really been consolidating on a weekly. So you can just keep tabs of that, okay? So we've really been consolidating. So let me now toggle back, to the daily time frame and see what we've been having. So I don't want to talk about everything that's been happening down here, but then let me start from this. So this day, this called a Trump scandal. So I do hear many people call it Trump scandal. Okay, so I do hear many people call it Trump scandal. Why Trump scandal? Because this is the day that he threatened to give China 100% tariff. Okay, so immediately, I don't know if he tweeted or he spoke, but immediately that happened. It was really crazy, man. It was really crazy. It's crazy how one man can do such things to the market. But then this called Trump scandal. So he threatened to give China 100% tariff on all their goods. I mean, it was crazy. So if I told you were trading this day, then I'm sorry. It was really crazy, man. It was about how many points? About 1,000 plus. So around 1,100 points. Point move. That's crazy. That's crazy. That's really crazy. Yeah, so you're having that, and we really try higher. So if you guys can see, I've abandoned the annotations on the weekly because I don't want to use them on the daily, because as you can see, we've really been ranging. So again, that candle is this one. That Trump's candle is this one. Okay. So on such days, the market is rigged against you. It's called manual intervention. It's rigged against you, and there's nothing you can do. So if at all, at times, what you'll see is simply slippage. So if at all you had a stop loss, your broker might not be able to handle it properly, and it's crazy. So we had that, and The next 1, 2, 3, 4, 5 days, okay, so just the next week, after large range week, a large range day or a large range week, what do you anticipate? Consolidation or accumulation. So this other week was just accumulation, and then it broke higher, and price left us this to work with. So price left us that to work with, and we could see it hold price. So the bodies, how beautiful. Wicks do the damage, trading lower into these two levels, and trade into that, and then break above this high and also this high, giving us what? Another fair value gap, BC, buy side imbalance, sell side inefficiency. And also we can see what happens that there's also there's a void. Okay, it also give us this. So trade higher and trade back into this, as you can see right there, and then immediately we close below it. What do we anticipate? See, for price to trade back into it and hold it, going where? Lower. So again here, we're just having a bunch of fair value gaps above and below. So let me just mark that. Let me just highlight that fair value gap. So if the chart is not visible, you can simply just tell me. We're having that fair value gap, and immediately we break below this. That simply tells you that all of these now needs support price going where? Lower. So again, price revisits this level because not too much activity did take place here. So again, trading back to this level, and we're having this low here. That's sell side liquidity. Yeah. So that low sell side liquidity, and then you can see the body closing higher, then trade back into this level, fell short of hitting this upper CB, sell side imbalance, buy side inefficiency. Then it gives us another, so it continues lower, giving us another CB here. So I just want to mark this with the trend line. So that's our CB, sell side imbalance, buy side inefficiency. So what happens? We trade into it, and then see that. So that simply tells you this level is holding, and the rest of these days. So using day of the week theory, you drive price into this low here. So this is our sell side liquidity level. Sell side. So sell side liquidity right there. So again, after taking out that sell side liquidity, uh, which level are we having in price, above or below? So most of the time, just look at your dealing range now. So once we take out sell side liquidity, what's our next draw on liquidity? So we take that, and then draw these quadrant levels. So you simply partition it into 4 different levels. Then What you're having is simply the midpoint, which is the equilibrium level. So this is just simply premium and discount, premium, equilibrium, and discount. Yeah. So equilibrium is simply the midpoint. Yeah. There's the fair value price. Above this level, that's our premium. Below is our discount. So what happens? Price trades into where? Premium, and then trades into discount, premium, discount. So inside a range, I mean, because on the weekly time frame we've also been ranging. So there's what has been happening. Uh, at the premium, I normally like this 25 quadrant level. So at the 25 quadrant level, which premium array can we see? Simply there's CB here. Sell side imbalance, buy side inefficiency. So there's CB. Yeah. So we trade into it and we can see it hold, give us signatures of it holding. Yeah. So that's our 25 quadrant level. Let me remove that. Uh, Price trades into it. This Friday. So probably this was the draw of liquidity. Also 25 quadrant level. This is our dealing range from this high to this low. So we want to see price really expensive. Yeah. It's really uh overbought, and then that happens. So as we are trading low, we are simply trading to the discount. Yeah, so the discount level. So as we are doing this, again, you want to be using this range from that, from this low to this high. So as we are doing this, you want to see if at all we are trading lower and we're having this range from this low to this high, then it's now simply now trading into, I mean, below at the discount. Okay, so there's our discount level, price level. And at the discount, what are we having? There's last down cross candle with the bigger range. Then as we are leaving it, does it give us fair value gaps? Yes. So there's our high probability order block. So as we are, I mean, once we trade into this level, if it's trading lower, it's going to trade into this order block. And then we see that happen. Also, if you're still using this range, so there's still our equilibrium price level. As you can see, we trade back to a discount. And I just want to use this. So we trade back into what? This last down close candle with a bigger range. So simply, what is an order block? Yeah. So an order block is simply uh, a candle that forms at either support or a resistance level. Okay. So it forms at a support or a resistance level, but it has to be a candle with a bigger range, a bigger range with the largest range. Yeah. So as we are trading, so what's simply a resistance or a support level? So the real support and resistance level are simply the HTP arrays, fair value gap, order blocks, new week opening gap, new day opening gap. So they have to be on a higher time frame. Okay. So those are the real support and resistance levels. So again, and also sell side the liquidity pool, sell side liquidity, buy side liquidity. So immediately we took out this low, the last down close candle that took out that. Once we break above it, and does it give us a fair value gap? Yes, it gives us this fair value gap here, this small BC here, as we are breaking above it. So this qualifies it to be high resistance order block. I mean, high probability order block. Yeah. While there, when we are in an uptrend, any down close count, that's also qualifies to be a favor, I mean, an order block, but then it's a low probability order block. So we trade back into that. We can see it hold again, push it higher. So still this level, This level was still holding. There's a CB here. It was still holding. So it was just a tug of war between these two levels. Just been a tug of war. So there's our order block. Bullish order block. So traded into that level. And again, below it, which other PDRA can you see? I can see there's volume imbalance. We'll come to that later. And you guys can call on my live streams. I did talk about price taking out this low. And if we take this low, then we're going to trade into this one. So there's a volume imbalance. VIB. So let me leave it at that. So we trade into this order block, and again, it was doing this. So because the market is ranging, so once it does this, trades lower into this level. As we are doing this, trading higher, this is simply just your dealing range from that candle's high to this candle's low. That's your dealing range. And again, you want to utilize the 25 level. What's resting above it? So I recall where there's a time we were, this was a draw of liquidity. There's a volume imbalance. So two candles, the wicks overlap, but then the bodies do not touch. So slightly above 25 quadrant level. So there's one here. That's where price trades to. That's where price trades to. Yeah. So we trade into that. And then as we are trading lower, again, still, as we are trading lower, if we are trading to a discount level, yeah, so below the 50, the equilibrium, yeah. So if we are trading below price, then we are looking at the discount, okay. So there's a premium, then discount. So if we trade into premium level, which is like also above, slightly above the 25 quadrant level, that's the PDRA, that was the premium array that was above 25 quadrant level. And also, let's say there's up close candle with a bigger range, and then we break lower. So we trade into that. So I remember we were delivering price to that level. And then as we are trading lower, what's around the equilibrium or below it? So we're having this down close candle and also this fair value gap. So what happens? So these levels holds, I mean, we see these levels holding price. In fact, it was, so if you want to label a fair value gap, then just like that, but then it's really ugly. I don't want to do that, but we try into this down close candle again, and also you're watching that BC there. So that happened, and again, this level still holding, and we've really been consolidating. Again, I can see a volume imbalance right there. Volume imbalance right there. So as you guys saw on the weekly time frame, uh, we've really been ranging. So if I toggle down to a daily time frame, and I had, if at all I had those annotations that I had on the weekly, if I projected them down again into this daily, then my chart will really be, I mean, dirty, and I don't like a dirty chart. Yeah, so again we having this, so it just been doing this trade premium. So again here, again coming to project this from that high to this low. So this is simply just your range. This is the range that you're dealing with. So that's why it's called a dealing range. Yeah. So you just want to see price. If at all we trade into a premium, come back to a discount, and then premium, trade back to a discount. So just that tug of war. Okay. So again, we see we take out this high. So let me remove that. So we take out these candles, I mean this high buy side liquidity, took it out right there. And after taking it out, we drive price lower, taking out this sell side liquidity also. Sell side liquidity. After taking it out, again we revisit these levels. There's our order block still to the tick right there. And then we had real liquidity void around here. We can see once it trade above it, price again trades into it, so uses these levels to hold price, and also this other one. So I do like this one here. So this avoid. So we see that happen. So once we leave it, hold it, and then now push higher, taking out this high and this one. These are relatively equal now. This level is smooth because the retail mindset. Okay, so the retail logic, they treat these levels as resistance because it held price. It's been holding price, and again they believe that again if you trade above it, I mean into this level, again it's going to hold price. But if we break above it, then they have their buy stops resting above here. So if we break above it, then we are going to take it higher into this buy side liquidity, into this high again. Okay. So once they have their buy stops, uh, they chase it now higher. But then what happens? We punish them. Okay, punish them. Price gives us what after taking out relatively equal highs here. So that high and this one. Yeah, after taking it out, it gives us this fair value gap in form of a BC. So this fair value gap in form of a BC needs to hold price going where higher. Yeah, but what do we see? It fails. So once it fails and we trade below it, any return into this level, we need to see it hold price and push it lower because this level has failed. And also remember, this high and this one now relatively equal. It's a really smooth level, relatively equal highs top. Yeah, so there are some relatively equal highs. So this level is really smooth. So the next time price going to trade here, the retail logic is going to trade this level as a what? Resistance. So yes, these levels they do work, but then only for a short period of time. So I'm not disputing that. Concept of getting out from accumulation, fake manipulation, and real one. Yeah, so I'll come to that. Yeah, so talking about once you take out relatively equal highs, we fail to take out this high. So what happens that trade lower? So we anticipate to see this level hold. So the first time promises to be held. So the body close stays above the consequent encroachment. So that's good. That's positive. But then this next day we trade lower, close below it. So once you trade and close below it, then it now makes, I mean, it's of no use to us taking price higher. So what we anticipate is that any return into this level, we want to see it hold and push it lower. So we did see that taking out this sell side liquidity and also this one. So around here, um, all this time I was bearish and I was calling this low and this one. This one, these two were relatively equal. And I did say, considering, I mean, day of the week theory. So these are the, so just as we are starting this month, day of the week theory, if we are really, I mean, if it's a bearish week, then Tuesday, was it? Yeah, so Tuesday, I was anticipating to see high of the week form. Then Thursday, I was really bearish, bearish, bearish. And then Friday, I was not in the markets, but then TGIF now. Okay. We anticipate to see price trade back around 20 to 30% of the weekly range now. Then, so we started Monday. Uh, with that, we gapped higher. So still, right now, we're having that high to this low. So that's our dealing range now. And as you can see, because it's NFP week, so we are trading NFP protocol. So NFP protocol, Monday we're trading, Tuesday we're trading, Wednesday, I mean Tuesday, because it's a day before NFP. So you guys didn't see me yesterday get, I mean, into the market. So I was just trading on my own. And I was literally doing nothing because I understand we were waiting for today. Okay, so today again, it's not like we are going to trade before NFP, but we are going to trade after NFP. So I'll be live on. I am still perseverating between maintaining my streams to be on YouTube rather than TikTok, but then I'll see. I'll still try to be. I mean, I'll just weigh my options. So I want to be maintaining to be. I mean, to maintain one platform, something like that. But then right now we are still at the fair value price level. So right now I'll really advise you to not do anything because it's at a fair value price. Yeah. So let's say you are a businessman and you are selling flour or yeah, let's say flour. Yeah, unga. And you find that right now everyone is selling price, I mean, that flour at a flat rate, okay? So if you're a businessman, if you have that business mindset, then you'll be forced to hoard your flour. So hoard it and then wait to see wait for that particular time whereby uh, supply is minimal, and then that's the time that you want to now be availing your product into the marketplace, and by that time price will be favorable, okay, because of the demand of the customer. Maybe the supply will be less, so demand will be high and you can shoot your prices, something like that. So just wait for it to do something. So below price at the discount, you're having this gap, volume imbalance or new week opening gap simply. And above price, we're having what's this? An order block. So we were trading lower, this up close candle, inside this down. So this one here, we are watching that. I don't know. So the most sensitive part is the open and this low here. But then we've tapped it and yeah, so we're having that. So right now, really undecisive, and I won't say that I want to see it do anything. So I'll just wait for NFP. If it will trade lower, then well and good. If it will trade higher, well and good. But then that's what we are having. And on the 4H, so I just want to say something that I did say last week. So I was saying clear one to be on YouTube. Okay. So should I prioritize YouTube? Yeah, so I was also thinking of that. So what I was saying last week is that if I'm going to be bullish, then I want to see us break above this high. So because still we've not taken out this high, so I'm still kind of bearish because we've not taken out this high. So until we've taken out this high, then that's when I want to see us deliver it higher. But before this high is taken out, no, no, we might still do some things below this price level. So I can see Monday credit low of the week for until now. So today is Wednesday. If at all we are going to be bullish, then we understand day of the week theory that which day need to so day of the week theory, if we are told we are bullish, then low of the week needs to be formed early days between Sunday to Wednesday. Okay. If you're bearish, high of the week needs to form which day? Between Sunday and Wednesday. And then so if we are bearish, high of the week formed between early days, and then low of the week formed on intra weeks, that is Thursday and Friday. But then if we are bullish, low of the week Sunday to Wednesday, then intra week, high of the week. Okay. So each and every single day, just come to the marketplace with that ideology, that mindset. It will really save you a lot. So it really helps in defining your bias. Okay. It really helps in defining your bias. So I don't want to go any lower than this. So on the 4H, we've seen what's happening, and I don't want to go any lower than this. And yeah, but I did say because we are still at the equilibrium price level. This is fair value. Okay, so up is premium, below is discount. So look at any PDRAs on the discount, look at those on the premium, and use them. But then for now, just don't do anything. Wait for that NFP. If it will expand higher, well and go. If it trades slow, well and go. That will give you the direction. Okay, but for now, because we're doing this, no, 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 no. Yeah, no, no, no. So if you're a newbie, don't. Just wait, just wait. So I was having a question and I want to answer it, then I call it a day. So concept of getting out from accumulation, fake out, manipulation, and real one. Oh, so fake out, manipulation, and real one. Uh, so let me remove this. So I just want to explain it by drawing. So normally accumulation is something like this. It's normally not that perfect. Okay, aside the way I'm annotating it, but then accumulation, it needs to be really stagnating inside a certain range. Then we have that expansion. Then two things might occur, might do something like this. Yeah, so there's our accumulation. Then there's our manipulation. So accumulation, manipulation. So manipulation is there. You want to be trading inside, and it's always advisable. Consider time. Yeah. So I'm always strict on time, just like ICT is always also strict on time. So time, manipulation, accumulation. So you guys, I need your opinion. So should I be streaming on YouTube or because for now I can't stream on both. Yeah, because I still can't access the stream key. But I just want an opinion. So Is my streams on, I mean, should I stream on YouTube or TikTok? Then we're having distribution. Yeah. So accumulation, manipulation, distribution. So most of the time, how to spot real manipulation or a fake YouTube. So NQ is saying YouTube. So I'll consider that. So at times, I mean, you find that uh, accumulation most of the time will be forming around, let's say, Asian session. Yeah. So let's say Asian create the accumulation phase. Then manipulation, we had the London session create the manipulation. And then we see New York start the distribution. So something like this like this really clear. Yeah, there's a really clear power of three for setup formation. Okay, so there's a really clear one. So what you need to be doing is simply come inside, I mean, just wait for the manipulation. But as the manipulation is taking place, just wait for time. Okay, so time is normally 9:30, 8:30, 9:30. Okay, or 10. So time. But as we are manipulating, normally we are trading into a premium, I mean a discount PDRA. Okay, so discount PDRA might be sell side liquidity, might be a new day opening up, might be new week opening up, might be fair value gap on a higher time frame, might be order block on a higher time frame. Okay, so once we see manipulation, look at higher time frame, look at your higher time frame. Okay, then on your higher time frame, draw, always look at that dealing range. So for me, before I come to the marketplace, I normally do my personal analysis. So if I'm coming to the marketplace, I already have the narrative. So I want to see this happen, and then if this happens, then this needs to happen. So that's why you normally see me at times I just enter and I just come to the marketplace, start the live, and then execute instantly because I was watching something happening. So narrative this and then this. So come to the marketplace. So look, once you saw accumulation, wait for you coming to the marketplace when manipulation is taking place, but then you're waiting for time. So time, and then start looking for some other price signature that tells you that we were really trading lower, but now it wants to shift higher. So looking for something like low, high, lower low, or a higher low. So normally something like this. These are lower low. Then once you break above that, then again inside time. Yeah. So there are normally too many opportunities to grab in the marketplace. So again, you're waiting for time. So manipulation happening inside the kill zone. Okay. So wait for that pattern. Okay. Then either if you can't catch the low risk buy, wait for the second level, second buy. Okay, second level buy. So this pattern, so this PO3, this simply PO3, power 3, or AMD as others call it, AMD, accumulation, manipulation, distribution, or power 3. Okay, so these three, these are the paradigm shifts, okay, of the marketplace. So this is a clean one, this is a clean one. And also, uh, it's not, I mean, price will not only do this each and every single day. So there's those days that price will do something like this. Then we expand, trade back into that, trade lower. So what if price does something like this? So how will you know that which is the real, I mean, where is now our manipulation leg, okay? Because you'll be anticipating to see a manipulation. So I mean, when the market presents something like this, what you need to know is that understand the context behind the marketplace. So what's the order flow? What has the market been doing? And which day are we trading in? So order flow, okay? So what's the trend? What's your trend? So this normally happens whereby the market is really one-sided, okay? So if the market is really one-sided, then don't come to the marketplace with this, I mean, this ideological, in this price signature, you might find that the market is maybe uh, trading inside a certain range, okay? Trading inside a certain, but then on such a scenario, let's say time, it's still the same thing. So we're having time there, and also we are still inside the kill zone, okay? So something like this, we are still inside the kill zone. So let's say price does something like this. So let me ask you, if it does something like this, and we've really been bearish, let's say for instance, and yes, this was accumulation. Now you treating this to be manipulation, and also it's happening inside a kill, inside time, okay? So what happens normally is that understand the context behind the marketplace. So has it been really bearish or has it been bullish? So if it's really been bearish, then whatever it's happening here, so treat this as original consolidation. Then once you break lower, again look for this pattern, low high. So I understand at times there will be certain that pattern, but then look at day of the week theory. So which narrative are you which this day coming to the marketplace this day, which narrative are you using? Because let's say below price we're having what, maybe some fair value gap or some low sell side liquidity below price that we took out during this low, during this time. But then you see again price are trading to back into the original consolidation, and now it fails to take out to trade into your draw of liquidity. That's fine, that's fine. So understand, I mean, what the market is doing, which, I mean, that day you're coming to the marketplace. So are we, the fact that you're targeting buy side liquidities. So ask yourself, from Sunday to now, let's say Wednesday. So today is Wednesday. So have we created high of the week or have we created low of the week? So by asking yourself those questions, so you're coming to the marketplace aware of what is happening. So if we created high of the week, let's say on Tuesday, and today is Wednesday, and where's our new week opening gap? So let's say our new week opening gap is simply above price. So simply right there. So our new week opening gap, and today is on Wednesday, and we're really trading below the new week opening gap. Yeah. And let's say Tuesday we left this new week opening gap, and Wednesday we are really trading below it. And for you, you want to come to the marketplace with the idea that now you want to take it up here. But then it's Wednesday, we are trading below the new week opening up. And that simply tells you that the market is really bearish. So if it's Wednesday, we are really trading below the new week opening up, and you want to go long, ask yourself, why do you want to do that? Have you gone through the I mean, IST daily, I mean, is it called weekly bias or something like that, weekly bias? I can't remember the subtopic, but it did teach us about all of these things. Yeah. So look at your, so I just call it day of the week theory. Look at that. If we are really below the new week opening up on Wednesday, and on Thursday, again, we take out Wednesday's low, why again do you want to take it back into the new week opening up, and the market is telling you that it's really bearish. And again, if you look to the left, it's really violating all the bullish PDRAs. So it's really disrespecting them. Why do you want to force it? So again, it normally comes down to you individually as a person, yeah, because you have that fixed mindset that you want to see price do this, but then in as much as price has shown you three times that it's really not doing what you want to see it do, you're still believing that now this lower one, this now order block is going to hold it after it has disrespected every fair value gap that was above that order block. So I normally feel like it normally now comes just to you as a person. But again, but again, there's also another scenario, okay? There's also another scenario whereby we've really been ranging, we've really been accumulating, and now what happens that price manipulates lower, again comes manipulates higher, and then does this. Yeah. So let me now. So something like this. So how will you know that now there's now the real manipulation or there's now the fake manipulation? So what normally happens on such happenstances, okay? Uh, you'll find that on such days we normally will be waiting for certain news releases. So let's say something like NFP, FOMC, okay? Or we just or there's just something, I mean, happening somewhere. Maybe let's just take the example of FOMC. So you'll find that we've really been accumulating, but then you don't know if now there's going to be the real manipulation or because we've taken out this low one and so it normally does something like this. So we've taken out this low one and again it's coming for this upper one and now it does all of these, comes takes you out. So on such scenarios, yeah, so just come to the marketplace with the just come with what you know, okay? Just come with what you know and just be contented. So again, it comes to you personally. So let's say we manipulated inside time and you are taking some longs, okay? So once you take the longs, be contented and don't again chase the larger move. So most of the time, you'll find that the larger move is normally the down one. So now this was now not the main manipulation level, but then this one was the manipulation one. Yeah. So if at all you saw this, check that. If at all you're waiting for this one, avoid this one, avoid this one, wait for this one. So it now comes to you as a person. Okay. It now comes to you as a person. So I feel like if such a thing takes place, then just I mean, if at all you are to go long, just go long. Once you take it, you booked your profits, that's it. Okay, once you booked your profits, that's it. I mean, yeah, I feel like such a thing happened yesterday. So let's see yesterday's transaction. So yesterday was Tuesday. Yeah, I believe such a thing happened yesterday, or if not yesterday, I don't know. So yeah, we were having these lows. We're having these relatively poor lows. And also we're having these highs here. So what happened? It took out the lows, and that happened after taking out this high. So was this the real manipulation leg? Because 930 was here. 930. So was this the real manipulation leg? Because we trade lower, taking out this low, and then again we trade higher, taking out this high. But then you see here it gave us this pattern: low, high, lower, low, break above with speed and distance fair value gap. Then did that, and now again above price again. We had this taking out buy side liquidity fair value gap. Once we break below this fair value gap, so everyone was chasing it long. So I was watching a bunch of other guys streams. So that is after watching ICT's stream also. So again we had that, and everyone was chasing it long because they believed this was the real manipulation leg. But then again it turned out that this was it, cause, or was it, yeah, so this was it. So now this was the real manipulation leg, because again remember, like I said, until we take out that buy side liquidity, that 4H, this level here that I've highlighted here, I'm still bearish. So if at all I had that premise in mind, which I still had, because yesterday I was I wanted to see the Asian session because it created a pattern like a high low, higher high, break below, and then we really struggled breaking above that. So all these we were really striving. I mean, that a certain fair value gap was holding. So let me show you. There's one here, high, low, higher, high, and we were really sloppy, sluggish in taking out this low. So any return into this, yes, I wanted to see these levels hold, and this high here, we failed to take it out until after 10. Okay, so it's only 10 that we took it out, but then all this while we were really holding it, of which for me, I was watching all of this and I wanted to see it really go lower. Yeah, so I was really bearish. I was really bearish, but then it turned out that this was now the real manipulation. So taking out that buy side first, that was created during the Asian session. I mean, it was really not really Asian, the PM session. Yeah, so the PM session created this pattern. But then the PM high, we took it out at 10. So you guys can see now the difference. So we've really been doing that. And if you created this as the manipulation, real manipulation leg, then you are delivering price higher and expecting higher prices. Okay. But again, there's someone who was still bearish and was now seeing this as the real manipulation move. So again, all in all, what I'm trying to say, Ekiro, is that with the context that you're coming, I mean, you see that narrative that you have, you're coming to the marketplace with a certain narrative, okay? So that narrative of yours, if at all you see that we've taken out relatively or a certain low and it gives you a pattern to enter, then like we always doing, just go long. Make sure you pay the trader, book your profits, scale, manage your trades, okay? So just manage your trades and then scale your stop loss. So if at all you are offside, your stop loss will be the judge of that. So once it's taken out, then it's over. It's over for you. Or wait again for the next range. See what happens. If now that will be the real move now. I mean, still the same. Look for the patterns, exact patterns. Get in, scale. I mean, manage your trade, book some partials, and then leave one runner. If it fails to trade back into your stop loss, then that was the real move. Now just let the runner go. Just let the runner move. Okay, something like that. So that's all I have for today, and we'll be watching that uh, NFP. Okay, so let me just hope that I'll be streaming on YouTube. I guess. So I don't know how that will happen, but maybe YouTube, maybe TikTok. So you guys, you'll just check which platform I'll be using during that time. But I will pray that I use uh, YouTube. So I want to call it a stream, and thank you guys for tuning in. I feel like today is the day that I've had uh, so many people in my stream, and I want to thank God, and I want to thank you guys. Okay, so as you're trading, also remember to include God in your trading journey. Okay, and let's believe that it's all going to make sense. I mean, this year, and I pray that you guys make it big, mother. Pray that you guys make it big, get those payouts. Yeah. So if you can afford to get futures prop farms, just go for it, man. Trade it wisely and go for the payouts. Go for the payouts. I mean, don't be surprised if you make it, because it's real. It's real. So see you guys during the PM session. If we'll be streaming on TikTok. For those of guys who are not in my TikTok, simply my handle is Hemstone Lucy on TikTok. Okay, so you can give me a follow, and if you're not following me, if you've not subscribed, kindly subscribe. I'll really be grateful if you subscribe to my YouTube channel, because I'm trying to hit 100 subscribers by this month. So not really 100, around 200 subscribers by this month. So if you guys, I mean, the only support you guys can give me is simply like my video and subscribe. So until then, see you guys. Peace.